In today's video, we'll delve into a fascinating topic: unlocking profit, bullish Palantir trades to watch today. So before we start, if you find value in this video, please support our channel by liking and subscribing to our weekly updates. Now, let's get started. The stock market is always full of surprises. As of May 7th, 2024, we've seen a lot of action in the markets. The S&P 500 is up 15.5 points, hovering near its highs at 5,224, just 2 points shy. The NASDAQ is up 60 points. The Russell 2000 has gained almost 15 points, and the Dow Jones Industrial Average is up 82 points. Interestingly, the Russell 2000 is the strongest performer among these indices as of May 7th, 2024. Volatility is slightly up, increasing by 7 cents. This raises an important question. Does this signal a potential market sell-off? Not necessarily. With the VIX Volatility Index at 14.20, it seems unlikely that volatility will drop significantly, perhaps only reaching the high 13s at best. This stability in volatility removes a potential tool for predicting market movements, making it crucial to look at other indicators. Bonds are also on the rise, up 30 ticks to 117.05. As bonds climb, interest rates typically fall, but currently they are in a bit of a no-man's land between 120 and 113, where they've been trading for a while. This range-bound movement can be beneficial for various market participants. Now let's talk about oil. Oil prices are up 13 cents today, but earlier they were down by about 60 cents. This volatility can be tricky for new investors, so if you're looking to trade oil, consider the Micro Crude Futures, MCL, instead of the Standard Crude Futures, CL. The micro contracts are 10 times smaller, making them a less risky and more manageable option for beginners. They are priced the same and move in the same way, but with a smaller financial impact. For example, trading MCL instead of CL can be a good strategy if you're new to oil trading. If you were to consider a trade, it might be worth looking at a 1:2 ratio spread or a put ratio spread. These strategies can help manage risk while taking a directional position. Next, let's look at a specific post-earnings trade idea involving Palantir Technologies, ticker PLTR. Palantir has dropped significantly to $3.50 with an implied volatility rank, IVR, of just 2.5. Normally, selling premium would be unwise with such a low IVR, but we can take a different approach. Instead of selling premium, we can take a directional bet. As a contrarian, seeing Palantir down $35 following earnings presents an interesting opportunity. Many investors have asked how to get long on Palantir given its current price and the sentiment around it. Here's a strategy that might work: a pure directional delta play. To implement this, you could look at buying 270 delta call options and selling 150 delta call option. This back ratio spread can provide significant upside if the stock rebounds. Although the probability of profit, POP, is around 47%, this strategy offers a nearly 50-50 chance of success with substantial delta exposure. To break it down further, if you buy 270 delta calls and sell 150 delta call, your net delta is 90. This means you're essentially holding a position similar to owning 90 shares of stock. The total cost or risk for this trade is the debit paid, in this case, approximately $359. If the stock rises, the value of the options will increase accordingly, providing a leveraged return compared to simply holding the stock. Let's illustrate this with an example. If Palantir stays flat at $21.70 over the next 45 days, the 20 seconds call spread you hold will gain value, and the naked 20 call will also appreciate. This combined position could be worth around $3.40 if the stock doesn't move, compared to the $3.60 you paid, showing a small loss. However, any upward movement in the stock price beyond this will translate directly into profit. The beauty of this strategy is its simplicity and the defined risk. You can't lose more than the debit paid, making it a relatively safe way to gain directional exposure. If the stock rises significantly, the position will profit almost 1-to-1 with the stock price increase. Furthermore, trading strategies like these allow investors to take advantage of market movements with a controlled amount of risk. By understanding the mechanics of options and how to structure trades, you can create positions that align with your market outlook while managing potential downsides. As we navigate through these market movements, it's always fascinating to hear different perspectives. So here's a question for you. What's the most surprising stock movement you've seen recently, and how did it impact your trading strategy? Comment your thoughts below. We'd love to hear your experiences. Now let's delve deeper into the strategies and mechanics behind successful trading, especially focusing on how various market movements can influence your investment decisions. When looking at the overall market performance, it's essential to understand the broader economic indicators that drive these movements. The S&P 500, NASDAQ, Russell 2000, and Dow Jones Industrial Average are all barometers of market health. We observed a positive trend across these indices, with the Russell 2000 showing the most strength. This could indicate a shift toward smaller cap stocks, which often benefit from a risk-on environment where investors are willing to take on more risk for higher potential returns. Volatility, often measured by the VIX, is a crucial metric for traders. The slight uptick in volatility to 14.20 suggests a modest increase in market uncertainty. However, as mentioned, it's unlikely to drop significantly from here, possibly only into the high 13s. This stability can be reassuring for traders who rely on volatility to gauge market sentiment and make informed decisions. Bonds and interest rates also play a pivotal role in market dynamics. The increase in bond prices suggests a decrease in interest rates, which can have wide-ranging effects on various sectors. For instance, lower interest rates typically benefit growth stocks, including tech companies, as the cost of borrowing decreases, enabling more investment in innovation and expansion. In the commodities market, oil is a significant player. The fluctuation in oil prices can be attributed to various factors, including geopolitical tensions, supply and demand dynamics, and economic indicators. For new traders, the micro crude futures, MCL, offer a more accessible entry point into oil trading. These contracts are 1/10 the size of standard crude futures, reducing the financial impact and making them a suitable choice for those with smaller accounts or those looking to manage risk more effectively. When trading oil, it's important to understand the contract specifications and how they align with your trading strategy. For instance, if you were to consider a 1/2 ratio spread or a put ratio spread, you would be setting up a trade that profits from specific market movements while capping potential losses. These strategies can be particularly effective in volatile markets where sudden price swings are common. Now let's revisit the Palantir Technologies trade. Post-earnings, Palantir has seen a significant drop, presenting a potential buying opportunity for contrarian investors. With the stock trading at $3.50 and an IVR of 2.5, traditional premium selling strategies might not be ideal. Instead, taking a directional bet through a back ratio spread can be a compelling approach. By buying 270 delta calls and selling 150 delta call, you create a position with substantial upside potential. This trade structure leverages the current low price of Palantir, allowing for a significant return if the stock rebounds. The net delta of 90 means you have a position akin to holding 90 shares of the stock, but with a defined risk limited to the debit paid. This strategy's appeal lies in its simplicity and the limited risk. Even if Palantir remains flat or declines slightly, your maximum loss is capped at the initial debit. However, any upward movement in the stock price can lead to significant gains, providing a leveraged return that could outperform simply holding the stock. For instance, if Palantir rises to $21.70 over the next 45 days, the combined value of your options position would appreciate significantly. The key here is understanding the mechanics of options pricing and how different market conditions can influence your position. By maintaining a disciplined approach and managing your risk effectively, you can capitalize on market opportunities while protecting your downside. As of May 7, 2024, the overall market is experiencing an uptick with S&P 500 and other indices showing positive movements. Volatility is slightly up, indicating stable market conditions without significant drops expected soon. After a significant drop to $3.50 following its earnings, Palantir presents a potential buying opportunity. With an IVR of just 2.5, traditional premium selling is not viable, making a directional strategy more appealing. The proposed back ratio spread involves buying 2 call options with a higher delta and selling one with a lower delta. This setup aims to capitalize on potential stock rebounds with controlled risk. The net delta of 90 mimics the exposure to owning 90 shares of PLTR, but with limited risk equal to the debit paid. If Palantir remains flat at $21.70 over the next 45 days, the spread will experience a slight loss from the initial $3.60 paid to about $3.40. However, any increase in stock price could lead to significant gains, making this a high-reward setup for bullish investors. In summary, successful trading involves a deep understanding of market dynamics, economic indicators, and the specific mechanics of your chosen trading instruments. By leveraging strategies like the back ratio spread, you can create positions that align with your market outlook while managing potential risks. Remember, all investing carries inherent risks, and it's essential to do your own research and consider your risk tolerance before making any trades. Before we wrap up, we'd love to hear from you. What's the most surprising stock movement you've seen recently, and how did it impact your trading strategy? Comment your thoughts below. Please like and subscribe for more content on stock market strategies and financial insights. This video is for informational purposes only and should not be considered financial advice. Thanks for watching, and we'll see you in the next video.